Fourth quarter is when Amazon has a chance to highlight the fruits of its labor from the ever-important holiday season. So joining us now to preview the earnings results for Amazon, which come out after the closing bell today, is Tuna Amobi, analyst at S&P Capital IQ. Tuna, thanks for joining us today.
Thank you.
So the holiday season, undoubtedly the most important quarter for the e-commerce leader. The company's made a major push to ramp up offerings to members during the season. What are you expecting to hear?
Well, I'm expecting to hear very strong results. I think we expect that the company enjoyed some major momentum during the holiday. By all accounts, we think the Q4 was Amazon's best holiday season ever on any number of metrics, whether it's kind of Prime membership growth or the sales of various categories, both in the U.S. and internationally. And then also AWS, Amazon Web Services, we expect the traction that we saw earlier in the year to continue.
Great. And I'm glad you just mentioned Amazon Web Services. That's the company's cloud segment. Certainly in the last couple of quarters, we've seen that stock really move on earnings results because of growth in AWS. What do you expect to hear today?
We expect the affirmation of what we believe to be very strong long-term prospects for Amazon Web Services. So we've seen some kind of steady state growth north of 50 to 70% or even more for revenues, and then the operating margins are surprising us. Last quarter in the Q3 they saw 25% operating margins despite the price cutting in that business. So we expect some type of steady state margins growing from 20% and potentially higher than 30%. So that is one area that investors are watching closely as a major catalyst for Amazon.
Yeah, and the company's been trying to build up its international presence in China and India as well. How's it doing on that front?
Well, I think they're doing very well based on everything we've learned so far. India is particularly very good outlook in terms of the potential upside in that market. They're still in investment mode, to be sure, internationally. So they're still likely to post losses in the international segment. But when you look at the revenue potential from countries such as India and China, I think it's really enormous over the long term. That's why I think you're likely to see the company remain in investment mode as they continue to ramp up on their offerings, not just in the traditional retail, but also in the AWS segment as well.
And certainly Amazon's a company that spends a lot of money. It's also not necessarily the most transparent in terms of breaking down all of its different businesses and what it's actually doing. What do you see as the biggest challenges facing the company right now?
I think the biggest challenge is trying to predict, the company's investment swings. So in any given quarter, they can ratchet up, or down the level of investments in any number of areas, whether it's content or hardware, devices, or even AWS, fulfillment as well. So I think investors have really starting to take a longer-term view on these levels of investments. This quarter we expect Q4 should be no different, although I think the company will likely come in at the higher end of their consolidated operating income guidance. They guided to $700 million to $1.9 billion. We think they could actually exceed the top end of that, which would be a major milestone despite the investments that we just talked about.
And in light of that, Amazon was one of the top performing stocks. I believe it was the top performing stock in the S&P 500 last year. We've seen it sell off, though, so far in 2016. Is it now a good time to buy? What's your stance on this stock?
So we're still maintaining our buy recommendation, Morgan, on the shares. Our 12-month target price is $685. So sure, there's valuation concerns, as you alluded to, after last year's significant run-up in the shares. But if you look at price to sales, which is our preferred metric, I think it's still relatively attractive to other internet retail names. So we think that based on the growth upside from here, both domestic and internationally, that the shares should provide at least 15% or more upside from current levels over the next 12 months.
Great. Tuna Amobi, thanks for joining us today. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Downey from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.